Welcome back. UBS, one of the very few firms that can boast $3 trillion in assets under management. Where do they put that money? How do they advise clients? We're back right now with UBS Chairman Axel Weber. And Axel, it's nice to see you so bullish on what's happening. This is a special time that we're seeing. For the first time in a long time, we've got synchronized growth around the world, and that certainly has helped markets. Let's talk Bitcoin for a moment. The world's 30th largest currency, market cap nears MasterCard, $171 billion. What a week Bitcoin just had. Are you planning to start trading Bitcoin at UBS?
No, we're not. And I'm one of the few that has been quite skeptical about the construction of Bitcoin. I'm not skeptical at all about the underlying technology.
You mean the blockchain technology?
Blockchain and distributed ledger, that's going to be having a big impact on the financial industry, and it will transform trading. But the very construct of Bitcoin, if you look at it and compare it, people talk about it as a currency. It isn't, because there's nobody that controls the supply of it. And actually, when you look beyond that, Bitcoin is not a currency in the sense that it's an accepted means of payment for everyone. It is accepted by a few who trade in it, but you cannot generally use it. And I think for a long time it has been, too small to matter, really. Now with all the hype, it's becoming too big to ignore. And I'm pretty sure the regulators will have to have a second look at it, because it is something that has been showing very clear signs of an extraordinary bubble over the last few months. There are retail investors flocking into it. And I think the regulators have to look at it more sensibly and say, is that an investment that is suitable for everyone? Because, if you talk about fund of funds in the hedge fund industry, they have a clear warning written on them. That is, you can lose all your money if you invest in this product. A similar product description does not yet exist for things like Bitcoin, but it's very hard for me to understand what the intrinsic value of Bitcoin is. It's a transaction currency, so people trade in and out of it, and that causes, because there's a lot of demand, the value to rise, but it can easily go the other way. And so I think there is an obligation the regulatory sector has for protecting retail investors against this, because it really shows a sign of search for yield. Everyone looks at it not because they believe they have some true underlying value at hand, but they look at the price increases and they say, hey, have I missed a rally and should I be part of this?
Yeah.
And that's something where I think the regulators have an obligation to look at it more closely.
This is a really important point you make, because if we were to see a heavier regulatory hand, that obviously changes the dynamic right away. But the question is, what's backing Bitcoin? I mean, the U.S. dollar is backed by the full faith and trust of the U.S. government.
Exactly.
What backs Bitcoin?
Nothing. And that's where I think that the point comes in, and that's where I think it is not a currency, because in a currency, what limits the supply of a currency, as you said, is the central bank that stands behind it. And the value of a currency is always the supply relative to the demand for that currency. Yeah. There's no such mechanism as Bitcoin, and that's why I refuse to call it a cryptocurrency. It's a crypto. For me, it is not something that I would recommend investors to go into, but I find it very surprising that features of Bitcoin have not really been scrutinized by regulators, because it does seem to make its way into retail and into investors who might not have the loss-bearing capacity once this thing corrects in the other direction.
You're right, and a correction is coming. I mean, it's gone nowhere but up. But it's interesting that you say this has been the administration that's been the least regulatory president, the least regulatory administration, and yet we could see more regulations on something like a Bitcoin, which makes sense. Characterize the importance of what we've seen on the regulatory front. I mean, as a banker, you have been strangled in regulations these last 10 years. Does it feel different to you?
Well, definitely. And, as one of the things I do, I'm also chairman of the Institute for International Finance in Washington, D.C., which is the global lobbying group for all the banks. And we've engaged with the Basel Committee and with the governors and heads of supervision over all these years. And what is very clear is we're coming to the end point of this regulatory journey. I think it's very likely that, still this year in Basel, there will be an agreement on, and the dust will settle on regulation. Many regulators are starting to look at the overall impact of these years of regulation and ask themselves, is actually an additional piece of regulation really worth it, or does it not limit flexibility and the ability of banks to finance growth more than it adds to stability? And I think we've come to that point. And that's where here in the US with the 2 Treasury papers, they're looking at impact studies on have we actually gone too far, and they're already looking at pieces of legislation like Dodd-Frank, where elements of that, 15,000 pages of regulation, are viewed as not being productive, and some of that will be reviewed. I think some of it will, in the review, actually be scaled back, and I think that's a good development in general.